Well, the calamity in software stocks continues, and typically by the time it hits the headline news, which it has been now, it's typically too late for people to react to it. So let's see where this whole complex is and what might be in store for the sort of intermediate term going forward. I think the most important thing to keep in mind when we look at something as strong as software stock trends, we need to be able to measure the major trend. So we define a trend by something that's multi-quarter, multi-year in duration. And this chart here, you can see a bunch of colors. This is the IGV, or the tech software sector ETF. And you can see that the green background color there turned into a black background color in early January. That is when the bullish trend ended and it went into a neutral trend. That is basically a signal for us to sell something from an investment perspective. Well, since then, not only has the trend turned bearish, meaning the red background color, it's also, since that essentially sell signal, it's a fact that these stocks are down 26, 27% on the index level or the ETF level, obviously more on the individual names within there. So that's the trend. So that to us tells us that there's, from an investment perspective, that certainly is now, not only was it the time to sell when we got the signal, but also we now have a bearish trend on top of that. From a more near-term perspective, which is more what we call momentum, you can see we actually got a signal even earlier. In fact, it was December 31st is when the momentum from a trading perspective changed in these software stocks from essentially bullish momentum to back then, December 31st, bearish momentum. And that sector is down 27% in there as well. So both the trend, the long-term thing, as well as the near-term stuff is absolutely bearish. A lot of people will just pull up a chart and draw a line and come to a conclusion that maybe we're at a support level. I think that's an extremely dangerous thing to do. That is a bull market way of looking at things. But when bull markets, not necessarily broadly for the entire equity complex, but when bull markets change into more sort of dynamic markets, neutral or even bear markets potentially at some point, that is when these buy the dip and simple linear drawing lines processes, if you can call it that, fail spectacularly. And so I just want to make sure that people use a process rather than just drawing lines on charts, because I think ultimately that blows up portfolios. So again, momentum remains bearish, has been since December 31st in software stocks. The trend changed in early January. So really not a whole lot of good stuff here to talk about. Could there be an oversold bounce? Of course. In fact, if we look at our extreme oversold and overbought indicator, the Vertical X Pro, we actually have reached an extreme near-term oversold, or we did reach an extreme near-term oversold reading in early February. It then bounced 9%, and that's typically about a 2-week trade. So that was successful, and now we're looks like we're continuing lower. So we did have an extreme oversold reading for a while. That worked, and now we're continuing downside as it were. So anyway, hope it helps, and see you in the next video.